unprecedented pressure. Our objective today is to think broadly about the challenges and the opportunities facing our country moving forward. We're pleased to have such a distinguished group of speakers today. They will share their insights on where we are and what we need to do to provide strong, sustainable, and stable leadership at a time when the world is in crisis. 2020 marks the 10th year of the Global Risk Institute. GRI was founded following the 2008 financial crisis to ensure that we acted on the hard lessons learned at the time and to foster collaboration with government, academia, and financial services organizations. There were many industry and government leaders who contributed to the founding of GRI. TD Bank and Manulife Financial, along with the federal and Ontario government, took a leadership role in bringing together the 16 founding financial institutions. We've prepared a video to celebrate this special occasion. We hope you enjoy it.
In the 2008 global financial crisis, we discovered that sound risk management is more than good protection. It can be a source of competitive advantage for Canada. GRI was born to nurture and support our risk capacity. It was created to bring global perspectives to Canada and to take some Canadian risk leadership to the world.
Didn't mean we didn't have problems, but we'd done relatively well. And so we said, well, if there's any place in the world that ought to try to look at risk and say, how can we do this better, Canada was not a bad place to start.
And what was very obvious coming out of the global recession was the perception that we were good risk managers.
We had to do it in the collective, because otherwise we would never be able to succeed.
Our convening ability and bringing everyone together, I think, has been really powerful and made a difference in really getting to better solutions on key issues to the financial sector.
I think the greatest accomplishments are threefold. Number one, bringing together all those different constituents to talk about risk. Two, growing the knowledge of risk management and leading edge risk management practices. And number three, growing more risk management professionals and the knowledge of the field as a profession.
When we were coming out of the financial crisis, there was quite a large focus on credit risk, market risk, and liquidity risk, which were the major factors at the time of the financial crisis. Since that period, over the last 10 years, what I would call non-financial risks, operational risk, conduct risk, cyber risk, even climate risk in the last few years has evolved, emerged, and we've really been focusing on these in a much bigger way.
Today, as we face an unprecedented pandemic, the investments to make the financial system safer are paying off. Our financial system is proving resilient, but more than that, it's providing an invaluable shock absorber that's helping households and businesses bridge to the other side of this.
Organizations are not going to emerge from this crisis looking as they did before the crisis. And that's where we can play a role at GRI, which is to help support organizations in thinking through some of those risks and opportunities.
I think we've been well served as Canadians, but why the GRI is going to be important in this, so that we're better at anticipating things in the future, or at a minimum, when something kind of just smacks us across the head, we're better prepared to respond in a rational, hopefully objective fashion.
I think GRI is more relevant now because of the way risk is changing. We see focus on risks today that we would not have imagined even 5 years ago.
And I think that's the key opportunity and challenge for GRI as it moves into its second decade, to keep pushing itself to be anticipatory.
Risk is no longer just, can I write this loan? It is now managing a whole series of events.
Because what we have facing us as we move forward is not going to be less, it's going to be different.
GRI is a great opportunity for bringing all of those best practices to our participants so that they can learn and prepare for what will be the next crisis.
I think GRI today is just as critical as it was 10 years ago and as it will be 10 years from now.
This, of course, is bigger than finance, but financial risk management has a leadership role to play. We're good at this at Canada. This can be a source of competitive advantage for Canada, and it's something that Canada can do for the world.
Hello again, everyone. I hope you enjoyed that perspective on the founding of GRI. One of the key architects of this innovative partnership of industry, government, and academia is the person that I'm so privileged to introduce next, the Governor of the Bank of Canada, Tiff Macklem. During the global financial crisis, Governor Macklem was Associate Deputy Minister at the Department of Finance and served as Canada's representative at the G7, G20, and Financial Stability Board. Prior to Tiff's appointment earlier this year as governor, he served as the Dean of Rotman School of Management at the University of Toronto. Governor Macklem is a highly respected expert on the global financial system, on risk management and public policy, and is former chair of the board of the Global Risk Institute. Ladies and gentlemen, I am truly honored to introduce the Governor of the Bank of Canada, Tiff Macklem.
Well, thank you, Sonia. It's a real pleasure to be here. And thank you for that kind introduction. And thank you for including me in this birthday party. GRI is 10 years old, and we need to celebrate. GRI has many parents, and you just saw a number of them on that super video. I'm proud to say I played a small part in the beginning of GRI, and as you just mentioned, I had the privilege of chairing its board of directors for 4 years. So while I may be a little less than objective, I'm very pleased to celebrate this milestone birthday of GRI with all of you, and to salute the important role it plays in supporting sound risk management in our financial services industry. So before highlighting several financial system risks that confront us today, let me start with a few words about the birth of GRI. Imagine the economy is beginning to recover from the worst global recession since the Great Depression. You've seen unprecedented financial market volatility with large parts of the market freezing up. While Canada has managed the crisis better than many countries, collapse in oil prices, weak foreign demand, and overwhelming uncertainty are all weighing on the Canadian economy. Needless to say, this scenario isn't very hard to imagine. We're living it today. But this scenario also describes Canada in 2009 as we began pulling out of the global financial crisis. And it describes the circumstances of GRI's birth. In 2009, a number of us met in Ottawa to discuss why Canada had fared relatively well through the financial crisis and how to keep this advantage. The question many international colleagues asked was, how did Canada, with its financial system deeply integrated with the US, survive the crisis with no bank bailouts and no rescues, no failures? Now, as much as we wanted to think we were smarter or more prescient, the truth was more humbling. We had had our financial crises or our financial failures in the 1980s, and we'd learned some hard lessons. The creation of OSFI helped us make sure we didn't forget those lessons. As a result, heading into the global financial crisis, our capital standards were higher than global minimums. We had a cap on leverage, and we had invested in sound supervision and fostered a prudent, some would say cautious, risk culture. Our cautious risk culture is not usually celebrated. We often beat ourselves up in Canada for being too risk averse. But by 2010, sound risk management was looking more like a competitive advantage for Canada. It had protected Canadians from outcomes that could have been much worse. And we were convinced that in a future with a more globalized, tightly coupled, and tech-enabled financial system, risk management would be more important than ever. In my mind, at least, GRI was conceived at this meeting with a mission to preserve and grow Canada's competitive advantage in risk management. Now, a decade on, GRI is celebrating a milestone birthday. It's grown up to be more than I imagined. GRI has been instrumental in building talent and capacity in risk management, from university graduates to board of directors. De plus, l'Institut nous a permis de comprendre comment le système financier peut mieux répondre aux besoins de l'économie réelle en favorisant la résilience et la croissance. Depuis sa création, toute une nouvelle série de risques financiers est apparue. De la pandémie aux cybermenaces, en passant par les changements climatiques et bien d'autres. La gestion de ces risques demande de nouveaux types de renseignements et d'analyse, de nouvelles compétences, de nouvelles idées et de nouveaux cadres. GRI is more vital and necessary than ever. So happy birthday, GRI, and my very best wishes for the next 10 years and beyond. So let me now spend a few minutes talking about this new set of risks that we're facing. We learned from the global financial crisis that financial stability risks can come from outside our borders. But today I'm going to concentrate on domestic sources of risk. I want to look at the risks to the recovery from the pandemic. I'll then discuss some financial risks that will become more prominent as the economy recuperates. And I'll end with a few words on the financial system risks related to climate change. The impact of the pandemic on lives and livelihoods is beyond anything we've seen in our lifetimes. More than 3 million Canadians lost their jobs through March and April, and another 2.5 million saw their work hours reduced by more than half. We've regained about 2/3 of those jobs and hours worked. But it will be a long, slow climb to get everybody back to pre-pandemic working hours, particularly in the sectors that are most affected. Adding to the uncertainty, we appear to be in the early days of a second wave of COVID-19. Nobody wants to return to lockdown, but a second wave could test our resolve to practice physical distancing and keep the pandemic from spreading uncontrollably again. In Canada, governments have focused fiscal efforts on emergency relief, wage support, and subsidy programs to protect Canadians and keep workers connected to employers. Federal agencies have also helped companies with a variety of credit support programs. The extension of the wage subsidy and credit programs are now supporting recovery. La Banque du Canada a contribué aux efforts de reprise en maintenant l'accès au crédit et en apportant une détente monétaire considérable. Quand les marchés de financement essentiels ont été paralysés en mars et avril, la Banque a lancé une série de programmes d'achat d'actifs pour ressauter le fonctionnement des marchés. Ces programmes ont produit l'effet prévu. Aujourd'hui, les marchés financiers fonctionnent bien. The bank also cut its policy interest rate to the effective lower bound and provided extraordinary forward guidance indicating that interest rates would be very low for a long time. This commitment has been reinforced with large-scale purchases of Government of Canada bonds. This quantitative easing, or QE program, is working to reduce the cost of borrowing for households and businesses. Credit is flowing, and the financial system is acting as an important shock absorber during this crisis. But as bold as these policy responses have been, a full recovery from the pandemic will take a long time, and many risks remain. How well all of us, individual Canadians,
businesses, the healthcare system, and governments manage these risks will be a key factor in everyone's well-being. The biggest risk is the future course of the pandemic itself. The risk that we could be getting and spreading the virus is something that we can and must all manage responsibly. For that, we should be guided by our public health officials. But you won't be surprised that my focus today is the financial risks of the pandemic. History, particularly the knock-on effects of severe recessions, can help us assess these risks. We can also look to the impact of natural disasters and extrapolate to the whole economy. For example, bank staff have published a paper about the 2016 wildfires in Fort McMurray. The parallels are instructive. Then, as now, we saw a rapid stop in economic activity that caused a sudden shock. Then, as now, much of the lost ground has been regained quickly. But the episode left scars that took a long time to heal. One of the lessons of Fort McMurray is that households must remain able to manage income losses. C'est particulièrement difficile pour les ménages très endettés qui consacrent une grande partie de leurs revenus au service de leurs dettes. On sait qu'au Canada, environ 20% des emprunteurs hypothécaires n'ont pas assez d'actifs liquides pour couvrir 2 paiements mensuels. Le soutien aux revenus offert par les gouvernements a grandement aidé la population canadienne durant cette crise, tout comme les mesures prises par les institutions financières du pays. Since the pandemic began, Canadian financial institutions have allowed close to 800,000 Canadians to delay payments on mortgages. They've also allowed deferrals on lines of credit and credit cards. This welcome flexibility has kept debt payments down for many households. But the 6-month payment deferral period is ending for most borrowers, and the next few months will be crucial. To this point, the resumption of payments is going quite well. Of the mortgages whose deferrals have expired, the vast majority have returned to regular payments. Only a few have received a second deferral, and even fewer have become delinquent. Obviously, this is an issue we will continue to watch closely. Some businesses are also finding it hard to meet fixed payments because the pandemic has slashed their revenues. The problem is particularly difficult in service industries such as accommodation, food, and recreation. Companies in other sectors with limited cash buffers are also facing greater difficulty meeting their short-term obligations, including debt payments. Important parts of our commodity sector are particularly challenged. And more generally, the longer the recovery, the greater risk that cash flow problems could turn into solvency problems. In this vein, the government's extension of its wage subsidy program into next year is welcome, both for businesses hurt by the pandemic and for their employees. So far, Canada's financial system has shown its resilience. It continues to work as a shock absorber, helping Canadian households and businesses deal with the economic impact of the pandemic. Given the bank's system-wide perspective, we will continue to assess the risk that credit losses could become large enough and eat far enough into capital that banks need to tighten credit conditions. If this happens, our banking system would go from being a tailwind supporting recovery to a headwind. At present, this risk appears to be well managed. Canada's big banks have strong capital and liquidity buffers, a diversified asset base, and the capacity to generate income. They also have the protection of a robust mortgage insurance system. Let's remember that after the global financial crisis, international capital and liquidity standards were raised considerably. Many countries, including Canada, supplemented higher global minimums with additional buffers. These buffers are designed to be used in the event of a major shock, so the financial system can continue to support the real economy through bad times. This is a strength of a well-capitalized system, and the use of these buffers to support credit growth would be a positive sign that the recovery is being safeguarded without putting bank solvency at risk. I've already mentioned the extraordinary monetary policy actions that the bank has taken to support the recovery. Lors de notre dernière annonce du taux directeur, nous avons indiqué que ces mesures vont devoir rester longtemps en place. Sans ces mesures budgétaires et monétaires de soutien, la pandémie aura pu faire des ravages économiques encore plus étendus. But we know that this lower interest rate environment will require insurance companies and pension funds to adjust. And our policy path will eventually have an impact on financial system vulnerabilities. We came into the pandemic with a number of vulnerabilities. A significant portion of households were carrying high levels of debt. Some businesses were more indebted, especially in commodity-related sectors. Some asset valuations, including housing, seemed high relative to fundamentals. And some institutional investors had elevated holdings of less liquid or risky assets. It also seems certain that we will exit the pandemic with higher levels of government debt. As much as a bold policy response was needed, it will inevitably make the economy and financial system more vulnerable to economic shocks down the road. We will watch the evolution of financial vulnerabilities closely, particularly given our commitment to low interest rates. The bulk of household debt consists of mortgages, and so we will be monitoring activity in housing markets. Many housing markets have bounced back strongly in recent months. Some of this is pent-up demand built up over the containment period, but there's no doubt the market is being supported by low interest rates. Indeed, this is one of the ways monetary policy is supporting the recovery. We will also watch for signs that housing markets are being driven higher by speculation that prices could keep rising. And we will watch whether people buying houses are taking on outsized debt relative to their income. We're not back to the frothy housing markets we saw in 2016, and we expect the bounce back in housing to dampen. But if too many Canadian households start becoming dangerously over-leveraged, policymakers have several macro-prudential tools they can use. Our experience with the mortgage interest stress test shows how effective these tools can be. The bottom line is that the private and the public sectors together need to be acutely aware of the financial system risks and vulnerabilities as the economy recovers. GRI has an important role to play analyzing and highlighting these risks and keeping us focused on what may be coming down the road. Finally, let me say a few words about a longer-term risk that is accelerating: the impact of climate change and the transition to a low-carbon economy. The financial system has a critical role to play to support the real economy through the transition and to help businesses and households manage new climate risks. Pour ce faire, le système financier doit à la fois gérer ses propres risques climatiques aider à canaliser l'épargne vers des investissements productifs et durables. On peut s'attendre à une augmentation des risques physiques et financiers associés aux phénomènes météo plus fréquents et plus graves, y compris des dommages aux biens immobiliers et aux infrastructures. Many types of businesses also face significant transition risks related to the revaluation of assets and the reassessment of projected earnings and expenses. If not appropriately priced and managed, both physical and transition risks have the potential to bring about significant losses for financial institutions and could even threaten the stability of the financial system. Sound risk management starts with sound measurement. Companies need reliable, consistent, and comparable ways to measure and state their exposures to climate risks. Financial institutions, too, must understand and be transparent about their exposures. Investors are increasingly demanding this transparency. If we're going to do a better job assessing, pricing, and managing climate risks, we need better and more decision-useful information that combines climate data with economic and financial information. This will make the financial system and the real economy more resilient. And it will strengthen the ability of the financial system to fulfill its most critical role, which is to allocate savings to its most productive uses. This will help Canadians take advantage of sustainable investment opportunities. As part of its responsibility to promote financial system stability, the Bank of Canada is accelerating its work to understand the implications of climate change for the Canadian economy and the Canadian financial system. Last year, we developed a multi-year research plan focused on climate-related risks. And we joined the network of central banks and supervisors for greening the financial system. These efforts are beginning to bear fruit. The network made recommendations on how companies should assess and disclose their climate-related risks, building on the recommendations of the Task Force on Climate-Related Financial Disclosures. They suggest that companies take a scenario-based approach and extend their assessments decades into the future. Bank staff contributed to this effort and are now developing Canada-specific climate scenarios. These will make it easier for financial institutions to use scenario analysis as a forward-looking tool to better assess and manage climate risks. Measuring, pricing, and manage climate risks will require an all-hands-on-deck approach involving the private sector, the public sector, and the research community. And I'm very pleased to see that climate change is one of GRI's 3 big themes. GRI has a valuable role to play in bringing together financial services, banks, insurers, and asset managers to identify the most critical data gaps, pool climate change research, and build risk capacity. It's time now for me to conclude. As we gather to celebrate GRI's birthday, we can look back over the past decade with some satisfaction. Votre institut a aidé à renforcer la résilience de notre système financier et il a su faire de la gestion des risques financiers un atout pour le pays. On peut aussi envisager l'avenir avec confiance, sachant que l'Institut sera là pour nous aider à voir venir et à gérer les risques financiers qui nous attendent. The COVID pandemic has made it painfully clear that how well we manage risks has a huge impact on our well-being. Globally, I don't think it's an exaggeration to say that the quality of risk management will increasingly influence the success and stability of societies. Of course, I'm talking much more than financial risk management, but the financial services sector has a leadership role to play. 2 historic recessions in just over a decade have underlined just how much managing risks in our financial system matters to the livelihoods of Canadians. As we begin to recover from the economic fallout of the pandemic and look to the vulnerabilities ahead, sound risk management will be more critical than ever. Thank you. And I'd now be pleased, Sonia, to take a few questions.
Well, thank you, Governor Macklem, for those comments. We are so fortunate to have you at the helm of the bank right now. And thank you for agreeing to take a few questions. Maybe I could start with your perspective on the differences and similarities between policy and regulatory cooperation during the financial crisis in 2008 and this current crisis.
In many respects, these crises are very different. 2008 emanated from the financial system and reverberated through the economy. As I just outlined in my remarks, this time around, actually, the investment we made in strengthening the resilience of the financial system are proving to be very useful. The financial system is more of a shock absorber. It's not an accelerant this time. I think the other thing about this crisis is, as much as we thought 2008 and 2009 was probably going to be the worst crisis of our lives, the scale and the global impact of this crisis are just so much bigger. I mean, literally every citizen in the entire world is being impacted by this crisis. In terms of global cooperation, I am pleased to say at the central bank level, at the regulatory level, there have been high levels of cooperation in the darkest days of the crisis. Through March and April, you saw central banks around the world all coming in very aggressively with a series of asset purchase programs to really restart and restore well-functioning markets, and that has worked. And as we've pivoted more from market functioning to providing monetary stimulus to support the recovery, we're certainly having regular conversations and learning from each other. I will say at a global level, though, the level of cooperation in 08-09 was stronger than we're seeing globally. I do hope that an important lesson that we do ultimately take from this crisis is that when you're faced with a global crisis, a financial stability crisis, a global pandemic, a climate change, these are global problems, and they're going to require global solutions, and that is going to require more global coordination.
Thank you, Governor. Building on that a little bit, you've commented on the great uncertainty in terms of how the pandemic evolves. If it continues to evolve in a negative way, and there's another substantive shutdown of the Canadian economy, can you comment on what tools the bank still has at its disposal?
Well, as you've underlined, there is a lot of uncertainty, and certainly the biggest uncertainty is the course of the pandemic itself. In our last monetary policy report, we deliberately called it a central scenario to really highlight just how conditional it is on the course of the pandemic. I think Canadians have already seen we have a wide range of tools in our toolkit. As I mentioned, through March and April, as markets were freezing, the Bank of Canada came in very quickly in scale, introducing 10 new asset purchase programs. And together with the actions of other central banks, this has been very effective in restoring market functioning. On the monetary policy side, we quickly dropped the policy rate to its effective lower bound of 25 basis points. And that's been, we've now reinforced that with extraordinary forward guidance indicating that we will hold the policy rate at the effective lower bound until slack is absorbed so that we can sustainably achieve our 2% inflation target. And that has been reinforced with a large-scale asset purchase program or quantitative easing program, buying at least $5 billion of Government of Canada bonds a week. These are extraordinary actions, and these depending on what form if new problems emerge, what form they have, these programs can be scaled up, and if things go better, they can be scaled down. We also have some other tools in our extended toolkit. The bank has been very transparent about that. Some of the other tools which we haven't deployed to this point, funding for lending. Our European colleagues are using and have been using for some time negative interest rates. Japan and Australia are using yield curve control. These are tools in our extended toolkit. We're not actively discussing negative interest rates at this point, but it's in the toolkit, and never say never.
Thank you, Governor. We have received quite a number of questions, but I know that we only have time for one more. So let me close with this. Governor, you've been quite transparent in your messages regarding enhanced public communication versus the more traditional approach of leaving that role to intermediaries. I'm wondering if you could comment what you hope to achieve with this initiative and how you'll measure success.
Well, Sonia, over my career at the Bank of Canada, you've really seen a sea change, both at the Bank of Canada and indeed at most central banks, with much more transparent communication with markets. But as you suggested, I think the way it's typically worked is we communicate with markets, they interpret what we've done to the media, and then the media speaks to Canadians. And I think more recently, what you've seen at the Bank of Canada and other central banks are doing the same thing is we are putting more focus on speaking directly to Canadians. And I think that is something where we will need to redouble our efforts. So what does this look like in practice? It's a lot of things. It's hard for me to believe, but not everybody wants to read our monetary policy reports or even listen to a speech from the governor of the Bank of Canada. So, we provide plain language summaries. We've been using a variety of tools, whiteboards, podcasts. We've replaced one of our technical publications with something called The Economy Plain and Simple, really trying to outline our objectives and our activities for Canadians. The other element is we're doing more listening. If you want to speak to Canadians, you need to understand their preoccupations, their concerns, their worries, their perceptions. So we're doing more to listen to Canadians. In fact, we just had a cross-country survey called Let's Talk Inflation. We're very pleased. We got almost 9,000 responses from Canadians across the country, and we're starting to look through that feedback. What do I really hope to get out of this? I'd highlight a few things. First of all, Bank of Canada is a public institution. It needs to be accountable to Canadians. But it's more than that. Monetary policy works better when people understand it. We're in the business of trust in the value of money, and we've got to earn that trust. The other thing I'd underline is today more than ever, where you started, we're in an unprecedented situation. The Bank of Canada is doing things it's never done before. And that puts an even bigger onus on us to explain to Canadians what are our objectives, what are we trying to achieve, how are we doing that. It's really important that Canadians have confidence that we are doing everything we can to support this recovery, get people back to work, and keep inflation on target. How do you measure all this? Okay, well, that does get a little bit harder. I mean, ultimately, it's the effectiveness of monetary policy. Do we achieve our inflation target? How well is the economy performing? But there are some more proximate measures. We regularly assess the reactions and commentaries on our policy decisions. We do public awareness surveys to see how well Canadians how aware are they of the Bank of Canada, what we are doing, what we can do, what we can't do. And the other element is we are making a real effort to speak to broader groups, to reach into communities that we haven't done as good a job in the past of connecting with. Of course, right now we're having to do all that virtually, but that's a challenge that everybody's facing. So where I'd leave it off is I think going forward, this is going to be ever more important. The legitimacy and effectiveness of an independent central banks rests largely in the public's understanding and support. So Sonia, I guess I'm going to need to sign off, but I wish I could have been there in person. I just want to say a big happy birthday to GRI. Thank you for your leadership, and you've put together a great day ahead. Thank you to all.